Welcome back to Investing Talk Podcast. Today we're diving into a company that's well, it's been generating some buzz in the fintech world. LexinFintech Holdings,
Mm-hmm.
ticker symbol LX.
Yeah, they're a big player in China's online consumer finance market.
Right, offering, those digital loans and other financial services.
Exactly.
But here's the thing. It's a mixed bag of signals.
It is.
We've got some analysts saying massive growth is coming for LexinFintech,
Huge potential.
while others are, a little more cautious.
Yeah, waving those yellow flags a bit.
And the stock performance has been, well, a bit bumpy lately.
It has been a little turbulent.
So today we're going to break this down.
Hmm.
Help you figure out if LexinFintech deserves a spot in your portfolio.
Absolutely. Let's unpack it all.
Okay, so let's start with the potential growth factors. That projected earnings growth is eye-catching.
Oh, it's remarkable. We're talking about a projected earnings growth of, wait for it, 52.6% per year. And to put that in perspective, the average growth for the U.S. market hovers around 14.9%.
Okay, so that's a big difference.
LexinFintech could outperform the market by a significant margin, potentially.
52.6%. That's not just growth. That's like a rocket ship taking off.
Right.
I get why investors are excited.
I can see that.
But we got to look beyond just the earnings projections,
Yeah.
right? What else should we be considering?
Exactly.
Yeah.
Strong earnings growth is fantastic, but we need context. We have to look at the bigger picture.
Okay, so let's dig into some of these other factors, starting with revenue growth.
All right. Well, that's where we see a bit of a disconnect. LexinFintech's projected revenue growth is only about 4% annually.
Okay.
Not bad, but it is much slower than both their projected earnings growth and the U.S. market average of 8.8%.
So a pretty significant gap between earnings and revenue there. What's that telling us? Is this a red flag, or is there a reasonable explanation for this?
Well, it definitely needs more investigation. It could be a good thing. Maybe they're becoming more efficient, squeezing more profit out of their revenue.
Streamlining, cutting costs.
Exactly. But it could also mean that their overall business growth is slowing, and eventually that could impact those impressive earnings.
Interesting. So it's like a could be good, could be bad situation.
Right. We need more information.
Let's look at their recent performance then. Their Q3 2024 results should give us some clues.
Absolutely. Let's dive into those Q3 numbers.
Yeah.
One key metric to focus on is loan origination. Gives us a snapshot of their lending activity.
Makes sense.
Now, in Q3, their total loan origination was stable compared to the previous quarter, but down 19.5% year over year.
So lending activity is actually slowing down compared to last year,
Yeah, a little bit.
which is a bit concerning considering their whole business model revolves around lending.
Yeah, it is something to monitor. Now, their total revenue for Q3 2024 did increase. It was up 4% year over year, reaching 3,662 million RMB.
Okay, so revenue's up, but loan origination is down? Sounds like they're squeezing more revenue out of less lending.
That's one way to look at it.
Could tie back to that increased efficiency we talked about.
Possibly.
But how's that impacting their bottom line? What about profitability?
Well, this is where things get a little tricky. Despite the revenue increase, their net income attributable to shareholders actually decreased. It was down 16% year over year.
Hold on. Revenue went up, but profit went down. How does that even work?
It's definitely something to look into. It suggests their expenses might be growing faster than their revenue, squeezing those profit margins.
So there's more to this earnings growth story than meets the eye.
Definitely some layers to unpack.
We've got the strong earnings, but lagging revenue. A dip in profitability despite revenue growth. It's puzzling.
It's a bit of a head scratcher for sure.
Before we go deeper into the potential causes, I want to touch on their dividend policy.
Oh yes, LexinFintech recently announced an amended dividend policy.
And that's caught the eye of some income-focused investors, right?
It has. They're increasing the payout ratio to 25% of net profit, starting in 2025.
Wow, 25%.
Yeah.
That's pretty generous.
It is.
Is this a strategic move? Are they trying to attract a specific kind of investor? Maybe those who want that steady income more than just high growth?
It's a possibility. They could be trying to broaden their investor base, appeal to a wider range of investment strategies.
Smart.
It could also be a way to boost investor confidence amidst all this uncertainty.
Okay, so we've got these mixed signals. Strong earnings growth, but lagging revenue. A dip in profitability despite revenue being up. And this new dividend policy.
A lot to consider.
It's almost like they're sending mixed messages.
Yeah, it's creating some confusion in the market for sure.
What else has been happening with LexinFintech? Any recent news we should be aware of?
Well, besides the Q3 earnings and the dividend announcement, there have been a few other things. Their stock price took a hit on June 13th, 2024, dropped by 1.19%, and that was part of a 5-day decline.
5 days. Oof. Not a good look.
Not ideal, no.
What are the analysts saying about all this?
Well, it's a mixed bag.
Of course it is.
Some analysts are still very bullish on LexinFintech, pointing to that impressive earnings growth, seeing massive potential for future returns. They believe the company's well-positioned in that growing Chinese consumer finance market.
The optimists.
Exactly.
But what about the other side? Are any analysts worried?
Oh, yeah. There are definitely some cautious analysts out there. They're worried about user growth and a smaller margin of safety, urging investors to be careful, especially with the recent stock performance and all these mixed signals.
So we've got the bulls and the bears, each with their own perspective.
I guess it's time to bring in the technical analysis, see what the charts can tell us about LexinFintech's trajectory.
That's a great idea. Let's look at the technical picture. Now, we do see some potential warning signs. The stock has dropped for 5 days straight. And over the last 10 days, it's down 10.75%.
10.75 in just 10 days. That's a considerable drop.
It is. What about trading volume? Is that telling us anything?
It is. Interestingly, the trading volume actually decreased as the price went down.
So fewer people are trading it as it drops. Isn't that a bad sign?
It can be, but it's not always straightforward. In this case, the decreased volume during the decline might suggest that the selling pressure is easing up.
So maybe the downward trend is losing steam.
Possibly.
Okay, so not a death knell, but definitely something to watch.
Yeah.
What else is the technical analysis showing us? Any chance of a rebound?
Well, the predicted opening price for June 14th, 2024 was $1.68, which hints at a possible rebound.
Yeah.
But we'll have to see if that actually happens.
A rebound would be nice after that 5-day slump. But let's be real. The big question is hold or fold.
Yeah.
Should investors hang on to LexinFintech, or is it time to cut their losses?
That is the million-dollar question.
Right.
Based on everything we've seen, the earnings growth, the lagging revenue, the mixed Q3 performance, the dividend policy, that price drop, and those technical indicators, I'd recommend a hold for now.
A hold. So we're not giving up just yet.
Not quite. That continuous price decline and the decreased volume, they do warrant caution, but the positive earnings growth and the increased dividend payout, they offer a glimmer of hope. It's a situation that needs close monitoring. And, consider your own investment goals and your risk tolerance.
Makes sense. So we're in a holding pattern with LexinFintech.
For now, yeah.
So we're in a holding pattern with LexinFintech. We're seeing some positive signs, but also some red flags that we can't ignore. What are some of the key factors that could tip the scales one way or the other in the coming months?
That's a great question. There are several things investors should be watching closely. First and foremost, we need to see if LexinFintech can sustain this incredible pace of earnings growth. Remember, those high growth projections are a major driver of investor optimism right now. If those numbers start to falter, it could spook the market and send the stock price tumbling.
Right. High growth is great, but only if you can keep it up. What else is on the radar?
Revenue growth is another crucial piece of the puzzle. As we discussed, it's lagging behind earnings growth, which isn't ideal. Investors want to see signs that LexinFintech is expanding its revenue base at a healthy clip. If that doesn't happen, it could put downward pressure on the stock price, even if earnings remain strong.
So basically, we need to see those revenue numbers start to play catch up with the earnings growth. Otherwise, that earnings revenue gap could become a real problem. What about some of the other factors we touched on earlier, like user growth and competition?
Those are definitely important considerations. The Chinese consumer finance market is incredibly competitive, and LexinFintech needs to attract and retain users to thrive. If user growth stalls or declines, it could signal trouble ahead.
Speaking of competition, how is LexinFintech stacking up against its rivals in the Chinese fintech space? Are they gaining market share or are they falling behind? This whole industry seems to be moving at lightning speed.
It's a dynamic market, and LexinFintech faces stiff competition from both established players and up-and-coming startups. Some analysts believe LexinFintech is well-positioned to capture a larger slice of the market, pointing to their strong brand recognition and focus on technology. Others are more skeptical, citing concerns about the increasing regulatory scrutiny of the fintech sector in China.
That's a good point. We can't ignore the regulatory environment. The Chinese government has been cracking down on the fintech sector in recent years, and any new regulations or policies could have a significant impact on LexinFintech's operations.
Absolutely. It's a factor that investors need to be aware of. Any changes in the regulatory landscape could create headwinds for LexinFintech and impact their growth trajectory.
So it sounds like there's a lot riding on LexinFintech's ability to execute its growth strategy effectively.
Hmm.
They've got to maintain those impressive earnings numbers, boost revenue, attract new users, fend off competition, and navigate a complex regulatory environment. It's a tall order. Are there any specific indicators or metrics that investors should be tracking to get a clearer picture of LexinFintech's prospects?
Definitely. Keep a close watch on their loan origination volumes. That's a key indicator of their lending activity and overall business momentum. As we saw in their Q3 results, loan originations were down year over year, which raised some concerns. If that trend continues, it could be a warning sign that their growth is slowing down.
So basically, if they're not lending as much money, it could signal a slowdown in their business. What about other metrics?
Pay close attention to their net interest margin. That's essentially the difference between the interest they earn on loans and the interest they pay on deposits. It's a measure of their profitability and can be impacted by various factors, including competition and changes in interest rates.
Okay, so net interest margin tells us how efficiently they're making money from their lending activities. Is a higher net interest margin always better?
Generally speaking, a higher net interest margin is a good sign, as it indicates that a company is earning more profit on its loans. However, it's also important to consider the overall interest rate environment and the level of competition in the market.
All right, it's all about context. What about delinquency rates? We talked about loan origination, but what about the loans that aren't being repaid on time?
Delinquency rates are also a crucial factor to monitor. That's the percentage of loans that are past due. Obviously, higher delinquency rates are a red flag as they indicate potential credit quality issues and could lead to increased loan losses.
That makes sense. You don't want to see a lot of borrowers defaulting on their loans. It's not good for business.
Exactly. It can erode profitability and raise concerns about the sustainability of their business model. Investors will be looking for signs that LexinFintech is managing credit risk effectively and keeping delinquency rates under control.
So we've got a whole list of things to keep an eye on. Earnings growth, revenue growth, user growth competition, regulatory changes, loan origination volumes, net interest margin, and delinquency rates. It's a lot to juggle.
It is. But that's the nature of investing, especially in a dynamic and rapidly evolving market like China's fintech sector. It requires careful analysis, ongoing monitoring, and a willingness to adapt as new information emerges.
Well said. So where does that leave investors? How do we weigh all of these factors and make a decision about whether to hold on to LexinFintech or move on to something else?
It really comes down to your individual investment goals and risk tolerance. LexinFintech presents both potential rewards and risks.
It sounds like LexinFintech is walking a tightrope.
Yeah.
Big potential rewards, but some serious risks too.
Yeah, that's a good analogy. Classic risk-reward. On one hand, impressive earnings growth operating in a fast-growing market.
That's attractive.
But then you've got those concerns, lagging revenue, that dip in profitability, competition heating up, and those unpredictable regulations.
So how do we make sense of it all? How do we decide if it's worth the risk?
It's tough. No easy answer. It depends on your goals as an investor, your risk tolerance, and your overall assessment of LexinFintech. Can they handle these challenges? Can they be a long-term winner?
So if you're an investor who likes excitement, high risk, high reward LexinFintech might be tempting.
Yeah, but even for those risk takers, you need a solid investment thesis. What do you believe in about LexinFintech? Why do you think they can overcome these obstacles and achieve those growth projections?
Don't just buy into the hype. Do your research.
Exactly. What are their strengths? How are they standing out in the market? Do you trust their management team to execute their strategy? Think about these questions before you jump in.
And on the flip side, if you're an investor who prefers stability and a more cautious approach, LexinFintech might not be the right fit right now.
Yeah, for those more risk-averse investors, it might be wise to wait and see. Let LexinFintech prove they can address these issues and show sustainable growth.
So proceed with caution for both types of investors. But for different reasons, risk takers make sure you're not blindly following the hype. Cautious investors look for more evidence of stability.
It's all about matching your investments with your goals and your risk profile.
So to wrap it all up, we've got LexinFintech Holdings, ticker symbol LEXIN. Intriguing potential, but some warning signs too. Strong earnings growth, but revenue growth lagging behind you. Profitability has taken a hit. Fierce competition. A rapidly changing market. Unpredictable regulations.
A lot going on. Investors need to be critical. A healthy dose of skepticism is needed.
There are reasons to be both optimistic and pessimistic about LexinFintech. So what's the verdict? Hold or fold?
Based on everything we've discussed, I'm leaning towards hold, but watch closely.
So we need more data. See how LexinFintech responds to these challenges before making a final decision.
Exactly. The next few quarters will be crucial for them. They need to show they can handle these issues, get that investor confidence back.
Well, I think we've covered a lot today, given our listeners plenty to consider.
We have.
LexinFintech is a company to keep on your radar, but it's not for the faint of heart.
That's for sure, high stakes. But
Yeah.
that's what makes investing so interesting.
And on that note, we're wrapping up this episode of Investing Talk Podcast. Remember, this is just our analysis, not investment advice. Do your own research. Talk to a financial professional before making any investment decisions.
Couldn't agree more. Investing has risks. Be informed. Make the right decisions for you.
Thanks for listening to Investing Talk Podcast. Don't forget to subscribe, leave us a comment, share this episode with your fellow investors. Until next time, happy investing.